Hello and welcome. In this video, we'll solve Plundel group recent exam question. I strongly encourage you to pause the video and look at exam question first to get understanding. Questions are attached. So, let's go straightly to requirements so that we can understand what's being asked. As we can see, this question is divided into three parts. In the first part, it's required to calculate potential gain or loss on disposal. In the second part, it is required to make necessary adjustments and recalculate provided ratios. Then, we need to comment on the performance of the group and specifically refer to the potential disposal of Holloway coal. Firstly, as we need to calculate gain or loss on disposal, we need sales proceeds, net assets at disposal, and goodwill at disposal. Therefore, let's calculate net assets on disposal first. To do that, we need to sum share capital, fair value gain on land, because still on the financial position, and retained earnings at disposal date. So if we sum these figures up, we'll come up with net assets at disposal date. Then we need to calculate goodwill at disposal. For that, we have cost of investment at acquisition date. Then we need to deduct from cost of investment net assets at acquisition. To work out net assets at acquisition, we take into account share capital, fair value gain from land, because it was at acquisition date as well, and retained earnings at acquisition date. Also, since impairment was recognized, it should be deducted as well. This would result, summing up all of the above mentioned inputs and deducting from cost of investment, would result in goodwill at disposal. As mentioned before, if we deduct from proceeds goodwill at disposal and net assets at disposal, it would give gain on disposal of something like this. That's it for part A. Now let's move on to part B. Part B. We will recalculate ratios assuming Holloway cost disposal. We deduct from every ratio input Holloway's performance, with the exception of profit from operations calculation. There, we add back Holloway cost impairment. So these adjustments would change ratios something like that. That's it for part B. Now let's turn to part C. Part C. Since this part refers to to performance assessment, I would like to give you some tips on how to write performance assessment questions, given that you can read the sample answers in the attachment. First of all, Start from the most impactful ratio or indicator. Usually it's revenue. If can't decide which is the most impactful ratio, then start writing from the most significant changes, whether be it percentage change or amount change. Always mention the changes when you are explaining performance assessment. For example, revenue has increased from 82 million to 86 million dollars, and mention reason why it has increased or decreased, or despite of something. Maybe in our case, revenue increased despite competition. In this question, it was asked to comment on changes considering disposal. You should make sure to mention about Holloway's performance and what would be without Holloway's performance, overall the group's performance. And also at the end, try to add conclusion of what all of those assessments would mean. I hope this video was helpful for you.